and welcome to the end of week market review for Friday, February 21st, 2014. You are going to see that after the week, we end up with US markets declining bullish, while the Canadian markets are still holding its ground and continuing to rise. This means that although the market did end up the week down, we did have just a few positive days, but all in all, the Dow Jones and the S&P 500 are both down 0.19% on the day. We do have gold up 0.69%, silver up 0.72%, and oil down 0.44%. Taking a look at some of our economic reports, and the one that really jumps out to us is from February 20th, and you're going to see that they were expecting 335,000 filings, and in reality, we ended up with 336,000 filings of jobless reports. This means that there were more than expected and definitely helped contribute to some of the negative trading throughout the markets. Right now we're looking at the S&P 500 on the daily chart. You're going to see that it is up against its overhead resistance, which is a previous cycle high. We found resistance here just a few days ago and are now starting to pull ourselves back again. The MACD is declining bullish and with its black line still above the blue line. Looking at the weekly chart, you're going to see that the decline isn't that significant, and we really don't need to be that concerned with this at all. Right now we are testing those cycle highs. You're going to see those same cycle highs are actually our all-time highs, and the S&P 500 really has not been this high before. If we break up beyond it, we're definitely going to be looking at a much more aggressive market state. Here we're looking at the Toronto Stock Exchange. You're going to see that it has been continuing its climb upwards despite its slightly negative day today. When you take a look at the weekly chart, you're going to see that we've really been pushing ourselves up into higher highs. Just how high we're going to go, we really have no idea. But we know that if the TSX does pull back, it's going to have quite the decline before it comes down to its major support level, which is the 26 EMA. Right now, our volatility indicator is currently at 14.46. This means that it is getting stuck at that 200 EMA, which is acting like resistance. Now, you're going to notice that we've mentioned that it is resistance, and that's because we're looking for this indicator to go down. Typically, this would end up being support, but because this indicator is backwards, it is resistance right now. If we can get down below the 200 EMA, then we can consider the markets to be back at a normal level of volatility and much easier to trade in. If you have any questions about anything that we've discussed, you could either send us an email or phone call. All of our contact information is on the screen. So with that said, this has been the end of day market review for Friday, February 21st, 2014. Ciao for now.